Welcome everyone, and thank you for joining the CFA Society Switzerland's webinar on the COVID effect on Swiss economic and business trends. A bit of technical instruction. During the webinar, everyone's mics will be muted. Please use the Q&A symbol to ask questions or to comment on questions or vote on questions. As many of these questions and the questions submitted during the registration will be discussed during the presentation. As you know, the KOF Swiss Economic Institute provides authoritative information in the field of economic research, economic indicators, and forecasts. KOF has estimated that economic costs of the COVID health crisis to be between 22 billion and 35 billion Swiss francs just for the months of March and June. Today, we're very pleased to have the director of the KOF Swiss Economic Institute and member of several advisory committees in Switzerland and abroad, whose research focus on monetary economics, macroeconomics, and political economy has particular focus on the practical and current issues. We are delighted to welcome Professor Dr. Jan-Egbert Sturm.
All right, thank you. Thank you very much for this invitation and giving you a little bit of an insight as of what we are currently doing and how we are currently looking at the crisis situation. I've prepared a presentation, and I would suggest that I switch to that particular presentation and then talk you through these slides, and then subsequently we can go into a Q&A session. Okay. I'm now moving to my slides. I hope you can all see it. Yes. All right, so where do we stand? And probably I have to talk quite also a bit about the international environment. As you all know, Switzerland is a small open economy, so it's very much dependent upon what's happening around us, and that also holds during this particular crisis. It's not a crisis that started in Switzerland, as we all know. It basically started in Asia, and let me first look at the number of worldwide infected cases as is being published by the Johns Hopkins University. This is basically the most reliable data source if you want to look at the world level, and that's what I'm doing here. And this is first of all showing you a picture as we had it on March 16. That's already quite a while ago. That's basically shortly before we released our first forecast in the Corona era, so to speak. Actually, we moved away from using the word forecast. We're nowadays only talking about scenarios, because it's very, very difficult, and the assumptions are very, very important if you want to understand what's going on there. But this was the database, at least with respect to the situation when it came to the infected people that we were using back then. As you can see, it was at that moment in time largely an Asian problem. Europe was coming, and the rest of the world, that's the green area here, well, that was also relatively minor still. Where do we now stand? And this is showing you the same graph again, but now extended up until today. So first of all, please look at Asia relative to Europe, US, and the rest. I've now split the rest into the United States and the rest of the world, so to speak. And it's obvious that the problem has moved away from Asia and is largely a European and American problem. Yes. Okay. If I still go back a little bit to Asia, then what I'm showing you here is the number of infected and registered patients, and we all have to be aware how difficult this data is. There are all kinds of problems with measuring who's infected, who's not. It depends upon how many tests are being carried out, so we shouldn't put too much weight up in looking in these figures, but it nevertheless can give us general tendencies. And what I'm showing you here is the overall Asia aggregate for the total of cases relative to the number of persons. This is all relative to 1 million person in that particular area. And what we observe here is that Asia is currently going through a second wave. The second wave is not in China, it's mainly in Singapore, but not only in Singapore. There are other countries also being hit by the second wave. And hence, that's something we have to remind ourselves of. Even if we get through this first wave, we can't be sure there won't be a second wave. And in Asia, we're currently experiencing a second wave. Singapore is in the second lockdown phase. Maybe this is coming to us as well. All right, now I'm going to show you the same numbers. First of all, for Asia and China again, but on a different scale. And here you see the same two lines as before. You hardly can see them anymore. That reflects how important the problem is in other parts of the world if you believe these kind of statistics. And I'm first showing you Italy here. This is showing you the number of corona-infected cases as being registered in Italy. Yes, and you see that the trend is slowing down, but it's still not declining yet. And note, what I'm showing you on purpose here are the active cases. Yes, I'm not showing you what most of the time in the media is being shown, namely the sum of all previous cases up until today. Obviously, that indicator can never decline. Yes, it can at best stagnate and stay constant. What I'm showing you here are the number of active cases. So I'm subtracting those people who have died, and I'm also subtracting, that's much more important, those people who have now been cured in the meantime. So we no longer are diagnosed as having the disease actively. And there we see a flattening in Italy, and first sign that it might actually go down, the number of infected cases. If I compare that with other countries in Europe, then here we see, first of all, the Swiss case. Switzerland was basically the country after Italy being hit the strongest. And the good news for Switzerland is the number of active cases have since the beginning of April been clearly declining. Yes, that's what we see here. Okay. Not the total number of cases, because as I said, the media is reporting the sum of this, and the sum is still increasing. But this is the active cases which are still being diagnosed as being ill. This is Switzerland, and comparing that to a couple of other countries, here you see Austria, Germany, and France. You also see here with France how problematic the data sometimes can be, because there is a sudden jump in this data. So somehow mysteriously they have found new cases and have been added them to this. Hence, we shouldn't overstate what's in this kind of data because it's quite unreliable. But at least for most of these countries, except for France, we see actually a decline going on with the number of active cases. So that's really the good news from my perspective. Here we see the aggregate for Europe, although if we take the overall European perspective, then the decline has not happened yet. We're flattening out, but it's too early to say whether we really can see that overall in Europe, so including Spain, including smaller countries, including Eastern European countries, we're over the top yet. At the moment, we can't say that. So Switzerland, in that sense, within Europe, is earlier than many of these others. That's what we see here. Okay. The most worrisome part is the United States. That's what we see here. There is no sign whatsoever that the number of active cases is flattening out or declining at all. Yes. So the US is clearly behind what's happening in Europe. That's for sure. Also, this we have to take into account. It was first Asia, then Italy, the rest of Europe, and now it's the United States, and most likely other parts of the world will follow. So there is clearly a staggered phase in which we all go through, and this has consequences for the economy, obviously. We can't have the illusion that once we have controlled the crisis for us is over, because we will be affected by what's happening around us. Partly because something can come back. The Asian problem is actually through to people coming from abroad entering Asian countries again to quite some extent. So that might happen in Europe as well. But most importantly for me is the economic situation. Yes, if the US is going to continue to be hit very hard, then even though Europe or Switzerland might be doing better, we're still in the same supply chain mechanisms, and hence we still have to fear that the crisis is going to take longer than simply looking at the number of corona-infected patients in our own country. What we're showing you here, and what I'm showing you here, is an uncertainty index, which is published by Bloom and his co-authors, and it's basically based upon media information, looking at how often the media is discussing policy uncertainty around the world. And what we clearly can see, this is the March data. So April, we don't have information yet, but already the March data, we see a clear sudden uplift in this uncertainty index. And that's for us, economy is very important, because under uncertainty, and certainly the kind of uncertainty we're now facing, so-called 19 uncertainty, we do know that firms are not going to invest. Firms are very, very sensitive to political or economic uncertainty in general. And that's the phase we're currently in. We have started publishing a world economic barometer, actually two of them, a coincident indicator and a leading indicator. These indicators are completely based upon survey results all around the world. Yes. So business tendency surveys, consumer surveys, these types of surveys are being aggregated here to a world level. And you can see the blue bars are GDP data mainly coming from the IMF, and the green and the red lines are showing the two indicators. And the coincident indicator has a higher correlation with GDP. It's smoother, so to speak, but it is not leading, it's coincident. And the green indicator is actually a leading indicator, which is targeted to have a lead of up to 6 months. So 1 to 2 quarters lead, that's in practice what's the case. And what we can clearly see with this indicator, the data which is being shown here stems from April 8th. So it includes the March figures, but it doesn't include yet the data for April. Yes, and you can all imagine that the April month is probably much more disturbing than the March month already was for large parts of the world. So my prediction is that this global indicator will certainly decline further. The question is to what extent. Yes, and I'm on purpose showing you also what the indicator did during the financial crisis. This is in pseudo real time, so to speak, so calculating backwards how it would have behaved in that particular period. And what we currently see is that we're moving in a very similar direction. The current crisis is most likely going to be at least as deep and as tough as the financial crisis, although it's very difficult to compare these two crises with each other because they have very different roots. This is showing the same data again, so I won't, given for time constraints, I think it's important that we can move on into the discussion quite quickly, but this is again showing you the data, and it's highlighting that indeed the leading indicator is leading the coincident ones. That's what we see, this clockwise movement, and now we basically see this sudden decline in both indicators, so we're really in an economic low currently. And on the right-hand side, what we see is comparing the current decline of this global barometer, the coincident one, with the one during the Great Recession. And there we see it's following a very similar pattern, at least in these 2 months, which we can now observe, the months of February and March. That's what we're seeing here. The February month was largely driven by Asia. The March month was more and more also driven by what's happening in Europe. And the prediction is the US will continue in the upcoming periods. Getting into Switzerland, this is showing you a timeline of what has happened in Switzerland from a health perspective. Yes, we see basically when the large events have been banned up until when the lockdown started on March 16, and we do now know when the first step of the easing is going to take place. That's April 27, and then there will be 2 further steps to follow on May 11th and in the middle of June. Yes. At the same time, I'm also showing you the data on the number of cases in Switzerland. And I showed you this data before. This area here, this orange-pink type of area, that is showing the number of active cases. Yes. The red ones are the one we're very sorry about. These are the persons who have diseased because of the illness, or at least they're being indicated that they were ill at the moment of disease. And then the green area is the positive part, so to speak. These are the persons who have recovered in the meantime. And as I already noted, what the media is mainly showing you is this number over there. Yes. The upper part, without distinguishing whether someone has recovered, is in the meantime deaf or actually still an active diseased person. And as already said, since early April, the end of March, we see a decline in the number of active cases. So in that sense, I really do believe it was time that we started with the lockdown, and we have to watch how these figures are going to evolve. It's very clear that the reproduction rate, is well below 1 at the moment. But of course, there is no guarantee that this will stay that way after parts of the lockdown measures will be removed. Okay, what has the Federal Council done so far from an economic point of view? Well, actually, from an economic point of view, it started on May 13, in which they said, okay, we need to do something. We will put large amounts of money into short-time work compensation schedule, up to 8 billion. And then there was another one, and in total 2 billion, which were being used for hardship cases and guaranteed bank loans. Together with my colleague Hans Gersbach, we immediately said that's most likely not going to be enough. We need much more than that. And we recommended the authorities to think big, so to speak, and set up a Swiss fund containing 100 billion Swiss francs, just to signal already to the markets and to firms that indeed the government is going to do everything, almost everything it takes, so to speak, to help them get through the current crisis. The government changed their plans a little bit. They increased their package up until 42 billion on March the 20th, basically concentrating upon short-time work, and that was the new important ingredient, 20 billion was being reserved as liquidity support. So firms can now actually get easy access to credit, basically using state guarantees. Yes. That would become active then as of March 26th. On April the 3rd, they noticed that the 20 billion is most likely not going to be enough, and they increased these guarantees to 40 billion, making this overall package currently stand at roughly 62 billion. Well, if we look into this, then actually what we can see is the following, and I think that's the right strategy, but probably not carried out to the full extent as I would suggest the government to do. Well, it is clear what we economists have seen is health had the highest priority, and during this lockdown phase, which is currently still there, the idea must be to preserve what we have. So actually, in contrast to what most economists would normally say, we actually want to keep structures alive. We don't want structural change during a lockdown phase. Yes. So we want actually firms to be able to move into a low production environment and allow them to nevertheless survive, and after the lockdown phase, be able to restart the engine, so to speak. And the way in which this is done is indeed helping firms by reducing wage costs. And that's what short-time work is doing. It's mainly reducing wage costs. It's allowing firms to get this part of their fixed cost in the sense of their bill, of their balance sheets, and the government is stepping in. It has the positive effect as well, of course, that on the consumption side, workers still have a decent income and can still continue to consume. Although during the lockdown phase, we don't really expect them to consume. We actually don't want them to go out. We want them to stay at home and consume much less than usual. So in that sense, this is not a Keynesian type of policy. This is really completely different. It is trying to keep structures alive. Now, the second element, because it was clear that this reduction in fixed costs would not be sufficient, is by allowing easy access to credit. Yes. And that's the 40 billion I just discussed before about. So a large part of the total program is being captured by these two elements. From our perspective, Hans Gersbach and my own perspective, this is not sufficient because liquidity assurance is not going to really help the firms to the extent what's needed. Many of these firms have additional fixed costs like rents to pay, leases to pay, interest payments to pay, and other bills which they have to pay, they can't get through. And of course, they can now have to some extent access to credit, but that means they know that they will end the crisis with a much higher debt situation than before. And what we observe in practice is that firms who are highly indebted normally do not have a very large probability of surviving and are less and less willing to innovate into the future and invest into the future, because their first task is to somehow get through the overhang of debt. Hence, they don't have a bright future. And already from the beginning, this could lead firms to say, okay, with that perspective in mind, seeing how long the crisis is going to take, implying that I will have a very high debt situation when everything starts again, I might already today decide to leave this particular market, to go bankrupt, so to speak. Yes. So we fear that liquidity assurance is not going to be enough, and we need more than that. We need insolvency avoidance, so to speak. Yes, that's one important element here. We need to prevent over-indebtedness in the economy and therefore in society at large. We have never said we should move into a full insurance type of scheme in which all the fixed costs are going to be covered by the public sector. We always said, no, this has to be a risk sharing. The government can do a lot, but cannot do everything, also to prevent moral hazard problems. Yes. We made some suggestions as of how we can do this. Most of the firms can very easily present their rent bills and lease contracts and interest payment of previous years, and based upon that, we can actually provide liquidity. That's the rough idea which we proposed to a large extent. The other reason for doing this is indeed the long-term burden sharing, because currently the burden of the crisis is not evenly shared by the entire society. Some firms are clearly being hit much harder than others. And in that sense, from a social perspective, also within the economy itself, a burden sharing might be needed, which implies this is a good reason for the government to step in, which implies at some stage in time, we as society at large will have to pay back this debt. We also made a proposal, or the idea of introducing after the crisis an increased profit tax rate, a corona surcharge, so to speak, to signal that indeed also the economy itself is more than willing to have a fair part of the burden being distributed amongst them. By using the profit tax rate, we actually have those firms who benefited from the crisis, or at least have still good prospects after the crisis, pay a larger part of the overall debt back than those firms who also after the crisis will remain in a difficult situation. Okay, I think I've spoken long enough for the time being, so I think I'll stop sharing my screen now and look at the moderator, Sheila, whether we already have some questions so we can start discussing more in general. Yeah.
Thanks very much. That's a really interesting background and forecast. One of the key elements that you highlighted in your forecast was the economic situation, the economic economy and the economic health crisis. That you indicated was a large percentage of the economic cost for Switzerland. Now that you see the progress and the progression that the international environment has, how does that affect your forecast now?
Well, what we have to realize, I haven't shown you that, but what we have to realize is that we can roughly analyze the current situation, the lockdown situation, as having three types of costs. The first one is coming from the international environment. Simply the fact that we do have demand coming from abroad. Normally we're selling a large amount of watches, for instance. As if people outside Switzerland don't buy these watches anymore, we have a problem. The other problem also with the international world is that we might have difficulties getting the right inputs. Yes, intermediate products might simply be lacking, so we can't produce as much. This was a problem, for instance, in Ticino, in which construction sites had to be closed, not because there were no workers at the beginning at least, but because simply they couldn't get cement, as they couldn't get the inputs from Italy anymore. Hence, that's the international effects on the Swiss economy. The second part is we do have cases, we do have people who get ill, and we have people who fear that they might get ill and actually put themselves into quarantine. Yes, that is reducing the labor force. Also in this respect, if schools close, well then I shouldn't mention that yet. So hence, there might be simply people ill or quarantined themselves, which are missing for the labor force and therefore cannot produce as much as before. That's a second type of effect. That's still not the lockdown effect, that's the third type. The third type of effect is really the government saying, okay, these types of shops are not allowed to open, these kinds of firms are not allowed to open. That's the phase which we're currently in. Okay. And what we did is we analyzed these three types of effects, which of course are related to each other. So you can't really add them up, you have to take into account that there are feedback mechanisms, a firm which anyhow would be closed because it doesn't have the intermediate inputs anymore. They're not hurt by an additional lockdown by the government because they couldn't produce anyhow. So these kind of interactions you have to take care of. If you do that, then in most of our scenarios, well more than 50% of the entire loss for the Swiss economy is coming from the international side. Yeah. So that's by far the biggest impact. And that's the reason why I showed you at the beginning, the crisis is not over if we in Switzerland manage to get the number of infected people in control, so to speak. It won't be over then because Europe is still heavily involved in this, and the US is more and more getting involved into this. So already because of the international environment, we will be facing terrible situations, so to speak, for the economy itself.
Given the fact that Switzerland is coming off of is containing the corona spread pretty well, could that influence a more positive economic outlook for Switzerland? Independent of the 50% that's not international related, is the remaining 50% more likely to show some improvement?
Well, indeed, if we are able to move out of the lockdown situation while keeping social distancing somehow alive, having the right kind of attitude, so to speak, making sure that we don't see the second wave, or a second wave is going to be only very regional, and we will be able to contain that relatively well, then indeed I think Switzerland is in a relatively good position. Yes. But we won't be back at the normal situation anytime soon. That's true. What I think is even more important in the medium run is that Switzerland is managing the crisis without thinking about, or without having to think about, using new tricks, so to speak, thinking about helicopter types of money or other types of ideas which are very unconventional, and we don't really know exactly what that's going to imply. What we're currently using are really traditional old-fashioned tools. It's public spending, it's the government who stands behind this. And even if they would be in a situation that they had to spend a total of 100 billion on the Swiss economy, and even that would only imply roughly 15% of GDP, pre-crisis GDP. So even that would actually be well capable of doing, given that we, before the crisis, had a debt to GDP ratio of the public sector of roughly 40%. Yeah. So we would, even in these worst case scenarios, remain below these Maastricht criteria, whatever they imply in the current situation. But the public finance situation in Switzerland is a very healthy one. So that's very good news. And of course implies that also the rest of the world will keep Switzerland as a country of high quality, of trust, of reliability, and which is all signaled through these kind of mechanisms.
Are you planning a revision of your estimates based on the new data that's developing?
Well, we're continuously watching what's happening, but we have to be quite honest. I already said that the data on the number of infected persons, etc., so the health data is already not that easy to interpret, and we have to interpret them very, very carefully because they're not always as reliable. This holds even more for economic data. We still are looking at data going back to January, February, and we have only limited information about what's really happening with hard data, so to speak, in the months of March, let alone April. So it's very, very difficult for us using our traditional approaches to come up with real forecast. Hence, we're now using scenarios. We're being very careful, and we don't want to update these scenarios on a day-to-day basis. It's also not very helpful because the confidence intervals around these scenarios are huge. So we have to admit that. Yes. We internally have planned that in May we will have a next real, update of our forecast and scenario activities. And in the meantime, we will, in a qualitative sense, try to inform the public as of what is happening.
Could you comment on on specific asset classes and if you think that they've been fully reflecting or over-reflecting or under-reflecting the reality, and those asset classes would be currency, equities, and real estate?
Yes, well, I'm not a financial market specialist. We are looking mainly at the real economy side. So I'm approaching this from this particular real economy perspective. And I think in Switzerland, we're lucky that we have a Swiss National Bank who is trying to prevent a strong appreciation. It will probably allow some appreciation. It already has done so. But I think we can count on them to make sure that the exchange rate is not going to create additional problems on top of what we already have for Switzerland itself. This doesn't mean that exchange rates around the world are stable. I mean, we won't have these kind of mechanisms at place in all the countries. So I do expect that there will be some movements here. There will be higher volatility than usual, but it's very difficult to predict in what directions these movements will be. The real estate market, if I look at the construction itself, we are, and I can be quite open here, quite frank here, we so far, or at least up until a couple of days or 1 or 2 weeks ago, we actually had the impression the construction sector can go through this relatively well. Of course, everyone will be affected, but we didn't expect that they would be affected that much. We had the impression it will be able to, at least to some extent, continue working on these sites. But we have to notice that in Switzerland, at least, almost 50% of employees in that particular sector have been put on short-time work right now, or have been asked to go on short-time work. We don't know how many will actually be used to that extent, but that's clearly much more than what we expected. So construction seemed to be affected stronger than what we, for instance, had in our own scenario analysis, which we released on April the 7th.
Good. To go back to the government programs to support the economy, looking at certain questions, it seems as though there's some skepticism about government involvement, such a heavy government involvement into the private sector. And you mentioned, you know, the hazards. How would you address the questions that people have about what's the exit strategy for the government to get out of the private economy?
Well, I think we have to really distinguish between the lockdown phase and whatever comes after the lockdown phase. Because in the lockdown phase, it was clear. We can't think Keynesian. We can't worry about that. We actually want firms to produce less. We want them to be able to keep their employees at home, etc. So in that particular phase, I think it is really the government who also needs to put the helping hand out here. And the Swiss government did a lot. I fully agree, yes. I still think they didn't do enough. I think they should have done more during that particular phase. Things are different after the lockdown phase. Yes. There we have to start worrying step by step about also whether the economy is recovering quickly enough. That's too early to tell. And I'm not quite sure when we will be able to really tell that, because what we will first see is, to some extent, at least in certain sectors, a kind of a V-shaped, initially V-shaped type of recovery, because some of the things are being in the pipeline, so to speak. People are still thinking about buying new furniture, are thinking about buying a new car, and haven't done so for the last couple of months, quarters even, perhaps. Yeah, what quarter? And in that sense, these kind of activities might lead to a run to these types of shops. So I can imagine that once it is possible again to buy furniture and buy cars, for instance, that indeed there will be a sudden strong increase in these types of products. These products we can actually, well, store in our minds. We needed a car and we can actually reactivate that. And if many people do that at a very similar moment in time, this is going to lead to a V-shaped type of recovery, and actually might overstress some of these firms. Yes. Currently, they don't have anything to do, and then suddenly they will have more to do than what they actually want to do. The same holds, for instance, everyone working in the event industry. Yes. Currently, all events are being cancelled, but we all know, many of them have said, we want to have the event later on top of the normal events, which were already planned for later on. Yeah? So you see that suddenly these kind of activities might happen. This will happen in certain sectors, certain branches, certain types of activities, not in others. Yes? We won't suddenly go much more to a cinema as before. The movie is old, we only, or going to a restaurant twice as much as usual. These things don't happen. So some of our consumption patterns won't be simply doubled in the near future. They are simply gone. They will never come back. Yeah? And the question is, how do we deal with that? And how can we help parts of the economy which are suffering with this kind of medium-term effect, yes, and have to get them through? And that's not obvious. I'm still not thinking for myself about Keynesian types of policies. I'm still worried about getting some of these sectors through the current crisis, even after the lockdown. And as soon as we're talking Keynesian, then I'm probably in line with what some of these people have asked. And I also think, I'm not quite sure how much the Swiss government can do there, because most of our industry is based upon foreign demand. Yes, we sell watches, we sell pharmaceutical products, we sell financial products, insurances, etc., etc. Many of these depend upon foreign demand and cannot be simply compensated by the government. That's not feasible.
Looking out, and you mentioned that already, for example, Singapore is seen as the second wave. And to what extent have you incorporated a second wave into your economic outlook? What does that have? What effect does that have on the economy? What effect does that have on the government's ability to support the economy through? What effect does that have on the consumer habits? The fear of a second wave, or just the generalized fear that the virus is around, whether it's a second wave or not. What are the long-term implications that make this quite distinct from the 2018 crisis, where it happened and that was it? Now it looks as though it might persist or even reoccur.
Yes, this is actually one of the reasons why on April 7th we only released information about the lockdown period, so to speak, about the months March up until June, because it was, especially back then, completely unclear what would happen afterwards. We have a little bit more information, but we're still quite in the dark there. Yes? So in that particular sense, well, as I said, we're probably going to release a new forecast in May, and that one will have an overall picture over the entire year and the next year, because there these aspects becoming more and more important, obviously. To what extent we are going to assume a second wave, where and how, it's difficult to say. I think it's almost impossible for us economists to start predicting something like that. We can think about what the consequences would be, but even there the consequences would differ a lot, whether the second wave would be again in Ticino or this time in Basel. Yes, you see what I mean? I mean, that's going to have incredibly different effects on those parts of the economy.
Talking about political economy, and given this uncertainty extending into the future, what do you think? What effect do you think that will have on, for example, the euro and other international alliances?
Yes, I think so far we as mankind haven't done a very good job in that particular sense. The first reaction of all countries around the world was going back to what happens domestically, not considering to that extent what's happening abroad. And we're actually facing a world crisis. This is not a Swiss crisis or a German crisis or a US crisis. This is really a world crisis. And this would normally be exactly the moment in time at which there would be more coordination going on. And that's lacking. And that's, of course, not a good sign. I hope, I'm optimistic, I'm a notorious optimist, so to speak, that we learn from that we think about how we can assure that in a next time, we don't make the same types of mistakes, namely going back to our own roots, so to speak, but think about how we can jointly master what's happening. We should have probably listened much sooner, much earlier to what's happening in Asia. They already learned much quicker than we did from the SARS pandemic or the SARS virus years back. We forgot that. We basically didn't really take the information, or we didn't learn anything from those, and we're now learning the hard way, so to speak.
Reflecting the CFA orientation towards investments, the question, a very popular question is why? How do you attribute the behavior of the equity market right now? That while your signals continue to decline, the market's off and running again.
Yeah, but that's normal. I mean, they basically are forward-looking. They have to be forward-looking. Though, if they've done a good job, I'm not a specialist here, but if they've done a good job, then already they took into account what is the most likely scenario for the upcoming quarter, so to speak, and already priced that in today. So from that perspective, they are more and more looking into the longer horizon and do realize that at some stage things must get better as well. So I think they've already priced in the second quarter to quite an extent and are more looking to the third, fourth, and next year.
Do you think there's an optimism that whatever happens, there'll be a bailout? You know, the government will not allow the economy to decelerate into some low abyss? And do you think that confidence is warranted?
Well, actually, if we simply look at the current figures, then we do see that we're getting on the upper hand. And Switzerland, I think we already are. So in that particular sense, the lockdown we can move out of, and we have to do that carefully, I think for good reasons, but things will improve. So I think that's important to realize. Whether we need a further bailout from the government, I don't hope so, but I tend to agree with you that the government will not let us down. It is, however, much different from the financial crisis, in which we only, in a sense, had to bail out large players. Yes, we were talking to quite some extent about the biggest companies in the world, the banks. This time it's very, very different. We luckily so far, and I hope that will stay that way, we do not think that the banking sector is in problem. We really believe these are the small, medium-sized enterprises, in particular in the tertiary economy, which is new for them. Because normally, if we have a recession or a downturn, it's always in the first sector. It's always in manufacturing and industry, and sometimes in construction. But it has never been in these service-related sectors, and it has never hit these types of small, medium-sized enterprises as is currently happening. And how to rescue them is much more difficult. So, yeah, because they're all small, they're all little, and we can't, the government can't simply take over these kind of businesses. That will not work. And so we have to think differently from the banking sector, in which we can, as a government, become partly owner of a large bank, and make sure that the financial system stays alive.
Are you worried about consumers changing their habits? And, you know, as you said, they'll go out to restaurants. They can't recover from the restaurants they didn't attend, they didn't go out to during the lockdown period. Do you think they'll recover to the previous level, or do you anticipate just a long-term consumer impact on consumption?
I think in some areas there will be. Yes, I think when we talk about travel behavior, it's difficult to make a forecast for the next 10 years, but at least the next years to come, we will be affected by that already mentally. Yes, and that will not disappear from one day to the next. Some people will immediately, when it's possible, start traveling to Asia and far away again, but many of us will probably be somewhat more reluctant than usual. So I think there will be changes in behavior, but at the same time, I don't think at the aggregate level we should overstate these changes. Yes, other changes are, of course, in the use of home office and internet-related services that will probably have been boosted quite substantially right now. We will see some movements down again when things normalize, but they won't fall back to previous levels. I think there will be these kind of structural changes. But from an aggregate perspective, these are relatively minor, to be quite honest.
But if we never get back, if the economy and consumer demand never recovers, then what's sort of programmed into the government support that when, you know, things don't go back to normal, it's a new normal, when can they start pulling back the support they've given?
Well, I think, actually, I do think that they should not keep all of these measures which are currently there alive for very, very long. As soon as there is a decent market back in place, then the government needs to step out. And then we have to face the truth. For instance, in Switzerland, we have a tourism sector which is very largely based upon Asian and American tourists. Yes? That will not come back to the same extent within a short period of time. Yeah? So, and that cannot be covered by the government. The government cannot replace a US tourist or a Asian tourist. There we have to rethink. Perhaps it can be compensated by domestic tourism, yes, because maybe we also behave differently and we don't want to travel as far out anymore, so we stay more at home. But again, also within the sector, this means reshuffling. Yes, we have now certain hotels which are completely designed to foster foreign tourists, and they do behave differently from a Swiss tourist. We also, the products which sometimes are being offered in these smaller little villages, if I go through some of these smaller towns in Switzerland in the tourism sectors, in the tourism regions, I basically get overwhelmed by watches. Well, if we in the future have more domestic tourists and less Asian tourists, then of course that is going to lead to a change in how these shops will look like. Yes,
You think the
So these
government
kind of
measures?
changes we need to allow. The government can't prevent that and shouldn't prevent those. I mean, that's not their task.
Well, yes, agreed. But do you think that the government measures will be flexible enough to allow that market transition to occur?
Yes, I think the major policy at the moment in Switzerland are twofold, namely are the short-time work, and there we know there are restrictions. You can't be on short-time work indefinitely, yes? So there will be an automatic end to that. And the same holds from my perspective with the state guarantees on the credits. I mean, also there comes a time in which there is no point in providing liquidity to firms anymore. So also there, this is relatively easy to stop.
Great. Just as a last question, what sort of things should we be looking at in the future that would change your perspective of a recovery and so forth? What would be the red flags that you would be looking for to change the trajectory that you anticipate now?
Well, first of all, it's obviously the health data, because we are now driven by what's ever happening there, because that's going to form policy to quite some extent. If we do see that R is getting bigger than 1 again, there will be policy measures, obviously. We have to take that into account. So that is going to change our perspective quite a bit. And we have to try to learn what the short and medium and long run changes in behavior are going to be. And there I already highlighted that we are changing our look on the construction sector currently, as an example, because we initially thought they might not be hit as much, but simply looking at short-time work in that particular sector, it's large. It's more than average, by far more than average. So in that sense, they do seem to be affected, and we have to adjust this. So we are currently looking at all these higher frequencies, from our perspective, higher frequencies, data, which can say something about what's happening in the real economy, like electricity consumption, like air travel, like short-time work, like the number of bankruptcies which are being filed. That's for a current period that was being locked at 0, so to speak. You couldn't do that, but that's now opening up again, and we have to watch those and have to see in what sectors is happening what. So we're trying to move with KOF towards using higher frequency data. That means monthly, ideally weekly or even daily types of data. And there we try to analyze, hey, do we see changes in particular sectors, in particular behavior of consumers, which might change our perspective as of where the crisis is hitting to what extent.
Do you think as these things evolve that there might be different models for reaction? So for example, the Swedish model was very much less lockdown and more persuasion. Do you think that as we go forward, there may be different models and different reactions to developments, especially the health developments?
Yes, I think so. We have to be inventive. The latest proposal I've seen, and which seems to be circulating in particular in Israel, is, for instance, the following. What we observe is that the infection lasts something like 14 days, so to speak. And it seems to be the case that in the first couple of days, people can't infect others. So you already are infected, but you're not already transmitting to the next person. And then the next 10 days, that's the problematic phase in which some of the symptoms are going to show, but even before that, you are already infecting others. So what the Israelis are now thinking about is moving to shifts in employment in which people have a 14-day period in which in the first 4 days they can work, and then they are 10 days in quarantine. Yes. And after those quarantine days, we have observed whether they were ill or not. And then they can work for 4 days again, because even if they would get ill, in those 4 days, they won't infect another. Yeah? You see, these are inventive mechanisms by which we can try to get back to a higher level of production, to a somewhat more normal functioning of the economy. And we have to think about these examples. They can't be implemented everywhere to the same extent, but I can imagine that in certain types of factories, that is a useful strategy, yes? To have people being put into these kind of shifts, 4-day work, 10-day not work, 4-day work, 10-day not work, something like that.
Do you think that depends on having sufficient testing?
Oh, yeah. Yes, I think that's actually the major issue from my perspective. We need to do much more testing. We need to have a random sample of the population in which we test what is currently happening with the virus. Yes, not only those people are ill, we know they're ill. We need to see in the society what's happening. That type of testing. We need to really be able to trace people. Yeah? Tracking and tracing, these apps which are being discussed are tremendously important for the post-lockdown situation to be effective, to be able that we can react quickly enough. If we only react always with 2-3 weeks delay, it's too late. Yes, we need to be able to react much sooner. And for that, we need much more testing. We need much more of these kind of mechanisms.
And do you think there's a capacity, for example, in Switzerland to provide that testing?
I think they're working hard on that. Yes, I can't tell you because I simply don't know whether they work hard enough and whether it will be sufficient. But I know behind the scenes there is a lot going on, and I think that's very, very important. I think really that's the key. The key is that we are able to trace and test in the future to circumvent that we have to that quickly go back into a next lockdown situation.
Well, one thing you mentioned, and you said you'd come back to, I'll just remind you, is the schools closing. What's your view on that?
Well, that's difficult. Even the experts find it very difficult. As far as I know the information is most people have the impression, that younger persons, school-age persons, primary school-age persons and younger, they can't be infected or hardly can be affected and also cannot transmit very quickly. So the likelihood that another wave will happen through these primary schools in particular is quite low. However, that's an hypothesis which hasn't been refuted, but the other hypothesis has also not been refuted, namely that it is a problem, that it is still feasible. So we're not sure. And in many of these dimensions, we simply don't know. We simply still lack the data. Yes, even though the crisis is already there for how many months by now. As we very often simply don't have hard evidence which can give us confidence that that kind of policy is the way forward. Hence, we need to take risks, and the economists know that there are always trade-offs. Yes, we can't have it all at the same time, so we shouldn't move ourselves in a corner solution. We should try to optimize the situation as far as possible and take those risks where they seem to be the lowest, and be able to adjust when we realize, okay, it didn't turn out the way we hoped it would. Yeah? We're in this situation now. I think many economists are describing that we're currently in this hammer situation in which the government simply locked down large part of the economy, and we're now moving into this dance situation in which we really are dancing with the virus, and we have to learn in this process how far we can go, what we're able to. But for that, we need to do it. Otherwise, we can't observe it. Yeah.
Very good. Very good. Well, thank you very much. This has been very interesting, and I think the questions have indicated how helpful it's been, how much interest there's been, and thank you very much for coming with us and sharing all these insights.
You're welcome.
Thank you.